No, this is not FUD, and yes, we have something that is very worrisome that I am seeing specifically on the option chain, and I do want to give you guys a bit of a heads up on this, so hopefully some of you guys don't lose money when you don't have to, and potentially offer a solution. Now, I'm not a financial advisor or a financial planner. We wear suits and ties and pink suits and pink ties and talk about stocks on YouTube, so I'm definitely not those two things, but take this with a grain of salt. If you want to do it, you can. You are responsible for your own investments, and you're responsible if you make money or you lose money. But let's not waste any time getting into it. Hit that like button and show your boy some love. But we all know AMC is prime for a breakout, and that does have some people itching to make some option trades and make some quick money. I don't blame you whatsoever. I've been trading options for about 3.5 years, not 3.5, 4 years. I'd lose count, but been trading options for a very long time, so I know the ins and outs to options. I know what is risky and what is relatively safe when it does come to options. Now, like I said, we are basically prime for a breakout. We're in this pennant. We also do have the Fast and Furious 9, the $70 million box office haul numbers for this weekend that are going to have a great impact on the price if you do ask me myself. Like I said, this is going to have a lot of people turning to options, and what I see on pretty much every single option chain is the fact people are eating up these 145 options, right? They're only 36 cents, but they are very risky. These were a lot higher in value, so some people lost money. If you did lose money on this video is supposed to offer some of you guys a potential solution to play closer to the money. So I'm talking $60, $65 with max gains of 500, 1,000% that do also offer you even more time. So make sure you stick through this video. But these options are very, very dangerous. Even options, obviously, the July 2nd, July 9th, July 16th, those are going to be more risky. Even the up until about July 20th, I think all these options are, quite frankly, a little bit too risky for my liking, just buying them outright because they are so expensive. But using the strategy we're going to talk about, that's a better way to trade this, and that is actually how I am trading this. But you essentially have to know when you are trading options, you do run that risk of losing a lot of money. Now, pretty much every single option chain, you have these 145s or really anything over 100 having a ton of open interest, and this is where I see a lot of apes that are probably losing money because these hedge funds, these institutions, they're not buying 145 calls, or at least for the most part they're not even going to have to hedge. Well, they will have to hedge for them if we do go to that price, but for the most part they're not buying these over $100 calls. They're buying closer to the money, 60, 65, 70, 75, even 80, 85, 90. But they're not, I would go out to say, they're not buying these over $100 strike options. So I do think there's a lot of retail investors that are going to get burned on these options. Now, I don't want to say you guys are for sure going to get burned on these options if you buy them. Odds are you will, probably a 98% chance that you will, just because they are so far out the money and you're going to have to see a huge move to get these contracts to even go up a significant amount of value. They're going to lose a lot of value because of time decay, especially this week on the July 2nd or even the July 9th. But I don't have a crystal ball. Anything can happen. Now, I am here to offer you guys a solution, not just tell you to not buy these or not do something, right? There is a solution to this. If you are feeling like you want to trade options, you want to hit these 1,000% gainers like we do in the buy and sell alerts, check that out, link down below in the description. They literally pay for themselves, but there is a simple strategy you guys can use and actually get more time on these options like we talked about and play it closer to the money so you don't have to see a huge move to make your max profit or around 1,000% gain. Now, it is simply a debit spread. So if you guys are unfamiliar what a debit spread is, I'm going to give you guys the quick breakdown. And some people get confused because they're like, well, I don't own 100 shares, and I'm going to explain it right now. So let's say for a theoretical example, right, I actually do like this trade, and I'm thinking about making this trade specifically, but for the $60 strike expiring July 16th, when you're buying a call, you're buying a right to acquire 100 shares at $60. Now, you can choose to exercise that right and actually buy the shares at any time, right? It doesn't have to be in the money. You could exercise it as soon as you buy it. That's your right. That's how American options work. But when you sell an option, you're essentially taking those theoretical 100 shares you have the right to buy and agreeing to sell them at a more expensive price. So that is a debit spread. In the meantime, you put up money, a smaller amount of money, and essentially if it goes above $60.50 for this example, you would make $50 per contract. I'll show you guys exactly how to do that and break that down a little bit more for you guys. So the $60 strike, right, for July 16th has to be on the same expiration date. You'd buy this or click on this to buy this. It come up a long call. If you're on Robinhood, it's very, very simple. If you're on other brokerages, it works the same exact way, but it's a little bit different how you'd actually implement this. Now, like I said, you buy the $60 strike, and then you would sell a 60.5 or any further up if you wanted to, but it's going to be cheaper to just do one above it. In this case, 60.5, $60.50, and you click sell that one. Comes out to 8 cents, guys. 8 cents for this trade. Your max gain on this is $50 per contract. So $8 into $50 if AMC closed above $60.50 by July 16th. Now, you can also do this going out further, right? You could do the 60, buy the 60, so you're acquiring the right to buy 100 shares at $60, and then you could sell, let's say, a 65, and you're giving up that right to those 100 shares. You have the theoretical right to buy at $60. You're saying, hey, I will sell you these theoretical non-existing shares at $65 per share. So then that would cost $123. That would be a $500 max gain because you're different, right? If you owned 100 shares at 60, it went up to 65, you would make $500, right? It's literally based off of the actual share price. So it's simple to look at. Every $1 move, that's in between the strikes, right, 60 to 61, that's a $100 gain. If it's 60 to 65, that's a $500 gain. And like I said, it would cost $123 for this trade. Now, your max gain, like I said, is $500. So you would make a smaller percentage return. So that is why I do prefer to go closer to the money. And that is why I say that, because I'm not a math major or anything, but that's about a 400% max gain. Whereas if you did this and you have a greater chance of it expiring worthless, right? Because you have to get it to go over 65 by July 16th, or it will expire. It'll expire with some value. I believe your break even on that exact trade would be around $62, but that's not really important. You want the max gain, right? You want the biggest return percentage you could possibly get when you're trading options. And then, like I said, if you did this one, that is $8 into potentially $50. That is almost 1,000% gain. I believe that's a 700, 800% max gain. So the closer you actually do this, like the less gap there is between like 60 to 65 or 60 to $60.50, you're going to get a better percentage return potential gain on these closer strikes, right? The closer spread. It's a debit spread, a closer spread. So that is essentially how you guys can trade this. You could do this mix and match this however you guys want to do. Now, what you don't want to do is sell something that is under the first one that you bought. Never, ever, ever. You are turning this into a credit spread. So you would get $20 up front, but if AMC closed over $60 by July 16th, you would automatically have to pay out $50. So if you did this on a mass scale, you would be risking to lose about 65% of what you put up if AMC closed over $60 by July 16th. I think we all agree that that is probably going to happen. Now, that is why you never want to sell anything that is under the first one that you bought. You can only go further out on the actual option chain. Like I said, the $60.50 one, that is $8. You can't go wrong trading this. Even if you put $100 or bought 10 of these, that's $80. Your max gain would be $500. That is a lot better than what we even said of 60 to 65, where it would cost $123 that you're putting up, and your max gain is $500. So doing this exact trade, you get closer to the money. It would only cost you $80 for a $500 max gain, essentially saving you about $43 on this trade compared to going further out the money. That's why I like to do this just like this. So hopefully this offered you guys some kind of solution, and hopefully a heads up and a warning to some people that aren't as familiar with options as, hey, a lot of these options that are over 100 are gonna expire worthless. Even some that are under 100, there's no telling telling when this move will happen, so they're quite frankly very risky. And these market makers are selling these options, right? They're not buying these options that are 100 to 145. They're selling them, collecting the money that you are putting up to buy them. So you're essentially helping the market makers. You're helping Citadel, all these other hedge funds and institutions, by buying these contracts that theoretically have a low chance of actually making you money. So here's a potential solution. Take it with a grain of salt, do whatever you want with it, but this is how I want to trade AMC going into next week, and I might specifically make this trade. So if you guys want to stay up to date with the moves that we are making when I actually make this trade, make sure to check out the link down below for the buy and sell alerts. You'll be notified every single time in real time when a trade is made, bought, or sold, stocks, options, or crypto, as well as check out the link down below for public. Get up to $70 in your choice of free stock, no deposit necessary, and no need to even link a bank account. And if you did this right now, you'd have your free stock in about 3 minutes time, and they do not route your order flows to Citadel. The only other brokerages that do not do that are Fidelity, Merrill Lynch, and then obviously Public. So if you guys are not signed up with that, you might as well do that. Let me know how much you get and what you get down below in the comment section. And until next time, I will see you guys later. Enjoy the rest of your night. Get ready for war.